Thank you, Yanis. It was a really good session. Okay, so now I'd like to introduce one more session from cash management working group that we have, which is regarding credit assurance, an invisible partner, safeguarding a treasurer's cash flow. The truth is, when I'm now in the company I'm working, I really understand the benefits of credit insurance. So let me welcome on stage Nikos Polimenakos, Delta, as a model, and Kyriakos Gigiris from Allianz.
So, Kyriakos, thank you very much for attending our summit. We are privileged to have you. Kyriakos is a weathered and seasoned professional in the credit insurance. He's been the head of sales for the last 2 years, yes, and he's providing valuable insights to businesses about credit quality of the customers, so in effectively protecting profit and securing cash flows for the businesses. So, without further ado, please welcome Mr. Kyriakos Gigiris, our valuable guest for today. The reason that you are here, of course, besides sponsoring the event, which is always respectable, the reason you're here because we want to highlight the importance of the credit assurance for the Treasury department. Because until now, the credit assurance was something sort of privilege for the credit departments.
Exactly.
But we want to highlight how important it is for the Treasury department, not only in terms of cash flow and protecting profitability, but in other aspects that we're going to discuss exactly now.
Thank you, Nico. Okay, now I'm heard. Okay.
Okay.
First of all, thank you. It's my great pleasure and honor to be with you today. Nico, after your flattering introduction, I cannot wait to hear what I have to say. So, thank you very much. It's our pleasure, it's our honor, not physically attending only the third summit of Hellenic Association of Treasurers, but we are proudly sponsoring the event for the first time, and we are very glad. And with this opportunity, I want to thank the HAT board and all the HAT members for this beautiful day. First of all, some essential things on me. Born and raised within Allianz Trade, I invested 12 years in the risk analysis, in the credit analysis and risk underwriting during hard and long crisis recessionary years. So I think that I have a rough idea how credit risk looks like. During the last 2 years, I'm the head of sales in Allianz Trade for Greece and Cyprus. And my prime mission is to make credit insurance a valuable insurance, but also a financial tool for Greek and Cypriot business. The reason that we are here together with you and Nikos, of course, is to show you how credit insurance can accommodate, can improve your cash flow management. And because for us, in Allianz Trade, the role of Treasury is a pivotal role. Financial stability is very key, and you are main pillars of that. And we are here to accommodate you various aspects of financial stability, including risk management, cash management, and, of course, any kind of risk that has to be with a credit insurables insured.
Okay, so let's start from the basics. What is credit insurance?
Okay, let's make a short definition for everyone to follow. Let's say that we have two B2B companies, and the supplier of one company is the supplier and sells with a deferred payment to its customer. So here you have a credit agreement. But what is a credit agreement actually? Client is not paying anything for that. He's not paying any fee. He's not paying any interest to you as a supplier, right?
So, thankfully.
Yeah, usually. So we think that actually this credit agreement is a 0% loan in this commercial relationship that you have. Let's say that you are providing a credit of 100 days. I'm just taking the Greek DSO here. So for an invoice of goods or services that you might deliver today, you are providing a credit of 120 days. Are you sure that you are going to receive this money in 120 days? To this question, a pivotal role plays and accommodates credit risk insurance. We are here to provide you with a predictive protection, which is actually to provide all necessary information in order for you to feel more relaxed and to make healthy sales and, of course, expand also safely.
Okay, so in a nutshell, yes.
Sorry, Nico, just, there are just the three pillars, actually, that we are working on. First of all is the forecast. Secondly, it's the indemnification. And last is the debt collection. Forecast, we give you the opportunity to make your financial forecast, to have a stable forecast and cash flow projection. Of course, we indemnify in case that the buyer is not paying you on time. And of course, we undertake the full debt collection services for you in order to free up your time and your cost through our services.
Okay. Opportunity given, I would like to highlight the visibility you have in the market because for a company, a customer is only a single unit, but for you is a unit that represents a lot of risk allocated by different companies. So
Exactly.
you are enhanced credit department inside the credit department, right?
Right.
Well, moving to the next slide, it would be great to hear a couple of words about the mechanics of how does it work? What's the processes?
Gladly to explain, Nico. So basically, we have three teams servicing our clients. First of all, it's the credit analyst. Second is the risk underwriters, and third is the the claimant collection services. But of course, the first two teams need to do their job very good in order not to be left only with the claimant collection. So credit insurance works with a credit limit per customer. The standard method is that you request a limit, and once the insurer is issuing the credit limit, the maximum insured amount is given for you. What we do is actually our credit analyst to examine the credit worthiness of your customers in credit. So they consolidate all this kind of financial data, not only the official ones that everyone can find in the general registry, but also the draft ones, interim reports, forecast, business plans, everything that we receive on a highly confidential basis, because most of the times it's not only you as the supplier on this customer. As a market leader, we have several suppliers for the same customer, so it's quite easy, very convenient for us to come in contact directly with your customer and ask for this interim data. Of course, for our bigger risks, our analysts are organizing physical meetings in customer premises where we do have the great opportunity to exchange information and to receive an up-to-date information that can allow to the risk underwriting to make front-coming decisions with very much of confidence, ensuring, of course, your interests and allowing you to expand your sales in new markets and in new buyers very safely.
Excellent.
But in terms...
There's a but, always a but.
Always a but, huh?
Okay.
Always a but. I didn't mention claimant collection experts, and there is a reason. Claimant collection expert you will meet only in case that we meet an unpaid debt from your customer. There are three, I would say, pivotal moments to that, which are summarized to the following. First of all, the credit insurance works with an overdue period. In case the due debt comes to an end and is not paid, you have the flexibility to ask for a higher credit period. The insurer can really examine your request, and typically within a day we answer to your customer, we answer to you, so that your deliveries to your customer are still insured for the extended credit period. But in case that if finally the buyer, with or without extension period, is not paying, we are here with a claimant collection experts. You submit us your claim, we speedily investigate, and we indemnify for the insured amount. And of course, claimant collection does not end there. We will start to work on your collection data immediately. Our claimant collection team will analyze the case, and we will ensure that we have all the documentation that we need in order to compensate and indemnify you the soonest possible.
So in other words, you bring expertise to every aspect of credit and collection process. Yep. And from my experience, it's easy to say that you are a market maker in terms of credit assessment and risk allocation, because you set the trend of the risk profile of a company.
Yeah. This is, I think, more obvious to the concentrated risks that we provide to the major corporates or multinationals, not only in Greece, but also in Cyprus and abroad,
Excellent. So let's move to your next slide, because the audience are keen in statistics and figures. So give us some stats.
Okay,
right?
good. Just to summarize a little bit, global credit insurance market was valued at 6.5 billion in 2022.
Just for Greece?
Yeah.
Yeah.
Sorry, global.
Global.
It's the global,
Okay.
6.5 billion. And is projected to reach 8 billion by the end of 2030. In Greece, we have, let's say, credit insurance usage is increasing during the first 5 months also of 2023. We're increasing by 11% this year. And of course, we're talking about more than 6 billion euro that we have covered as Allianz Trade, I'm speaking now, in Greece. This is a huge exposure, and this is, of course, periodically monitored by credit analysts. Of course, Allianz Trade is not only in Greece. Allianz Trade is the global leader in trade credit insurance. We are physically present in 52 countries with more than 5,500 employees. 3,000 of them are in the risk part. They are risk underwriters, they are credit analysts, so they are focusing on the constant monitoring of your customers. This is our prime, let's say, mission. And the service of that, for us, makes us, I think, unique. We have a risk database of more than 80 million companies that we monitor globally. 123,000 of them are found in Greece and Cyprus. I think that is quite a sizable thing to consider when you are talking about credit insurance. And through our market intel, we promote the best possible response rate to our customers. You will see that 90% of our credit limit requests from our customers are answered to them in 2 days. This is our main milestone. Honestly, last week we had a very real-life example. We had a policyholder calling us. He was literally having his truck just to leave and to invoice a buyer, a customer of his in Belgium. And he was literally asking us to check the creditworthiness of his Belgian buyer because the truck was on his way, and he was wanted to be sure that this specific invoice will be covered from us. It will not be a risk on his own. And fortunately, we are in the position to get to know the buyer, the customer, and we ensure the transaction. And this is, I think, the added value of the trade credit insurance contract. This is where you managerially, the contract is repaid, because finally, it's not only the bad debt and the transfer of bad debts for us, it's also to accommodate you with safe expansion in new markets and new buyers.
Well, I would like to highlight this, the last one. You said that it goes without saying that entering a new market, a new segment, is the safe way to get inside with the support of a global player that will help you navigate through and avoid risks. And I would like also to highlight the fact that 6 billion is not only for a vendor to protect his profit and his cash flow. 6 billion are also very important for the customer to negotiate credit terms and, as a consequence, to gain working capital. Okay, so exactly. the role is dual, and it's very important, and it comes directly to a treasurer's desk.
Exactly.
Let's see the next one. Top 7 reasons. Let's sum it up, practically.
Yeah. First of all, let me start with the left part, because trade credit insurance gives you the operational security. Because you simply transfer your bad debt risk to us, so you gain your profitability, you protect it. But our credit limits are carefully examined, and they are given for a reason. We are not careless. We are not issuing a limit that we are going to withdraw 2 minutes later because we ignored, we didn't see something important to you. We examine very carefully our decision, and we're trying to be fast and reliable for your business. And of course, we are here to accommodate the immediate claim payment in the event that you have an insured claim. This provides you with a financial stability, translated to the efficient working capital, to stable cash flows, and of course, safe budgeting for you treasurers.
Excellent. So, it's we have to see the new trends, you know?
Yep.
We are treasurers, technology is all over the place. So let's see what's happening in your segment.
Look, okay, sure, I'm not a prophet, you know, I cannot discount that every credit insurance contract will be transacted, will be operated online in 3 to 5 years. But, you know, I can just confess, actually, that putting a credit insurance policy is typically a policy with many touch points between the insurer and the insured company. So obviously, we need to work more on that. We need to develop digital solutions for that. For this reason, we are trying to digitalize selling products. We are trying to issue new digital products. Single invoice cover is one of the main fields that we are currently working on. Additionally, buy now, pay later in the B2B online commerce is adding certain convenience. We have seen that. We have launched that in the Spanish market during the last semester very successfully. We have seen that it's of very convenience for the B2B supplier, increasing also the basket trend and boosting his online conversion rates. Then I would say that another aspect of technology upgrade, of course, is digitalization of our indemnification. We're trying to small the waiting period between a claim being indemnified. So what we are now working on with our claims and collection department is to recognize what we need to make us less calculation and improve, lessen the waiting period for the indemnification.
Excellent. I think after this presentation, everybody understood that you have an appetite for risk, right?
Certainly.
Yeah, and they have an appetite for food.
Yeah.
Yes, yeah, right? So let's see a couple of questions from the audience before we move on to satisfy our appetite.
Yeah.
Yeah. Okay. First one. Why should a company prefer credit assurance versus channel financing, or effectively both choices are similar?
Let me, if I understood well, channel financing is self-financing, right? Self-insuring.
I'm not aware of. Well, yes.
I asked the question, not exactly. By channel financing, I mean selling the invoices to the bank in advance, and they collect then the invoice amount from the customer. So somehow, if your threshold low, then there is effectively zero, the same as
If I may reply this, you're gonna, either directly or indirectly, this guy is gonna accommodate this that you are describing. So they are behind this financing process anyway.
Let's say that major clients of us are not only companies, but also all the systemic banks and their factoring companies behind. So actually, we are re-insuring a major part of these transactions.
Yes. So,
Yep.
yeah. So a small twist, and then we hit the road. A small twist on this question. Why should a company get insured instead of making its own provisions?
No, the self-insurance.
The self-insurance,
Okay.
sort of.
Okay. I think that, first of all, I would say the obvious. Self-insurance requires to tie up a major part of your assets in order to feel protected in case that a bad debt comes up.
Okay.
So if we take the nominal provision of 0.5% on a 20 million of turnover, of sales, I mean that this would end to 100,000 per year, right? So the cost of the insurance policy is much, much less. The cost of the insurance policy, just to answer a little bit the question, varies, and it's the result of the insurable sales plus the level of risk. What is the level of risk? This is depending on your industry, your annual revenue, your history of bad debts, and your portfolio quality. This is why, prior to any kind of our business proposal, we ask from you a 3-page questionnaire clarifying all this information in order to prepare you a tailor-made solution only for your company. This is not a ready-to-use tool fitting everyone's needs, so we're trying to custom-made our business proposal in order to fit your individual needs. Just to answer your question, though, self-insurance, we're talking about a specific amount of money, but on the other hand, this money, when it's gone, it's gone.
It's gone.
Insurance companies have deeper pockets, first of all.
Excellent. So everybody, let's we really appreciate your time, your valuable insights, and your very not bold presentation.